Hello everyone, it's Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning March 28th. Well, it's a good thing you had a day off last Friday because this is going to be quite a busy week. The big day is this coming Friday when the U.S. non-farm payrolls are released, the biggest indicator of the month. In their last statement, the FOMC said that, quote, a range of recent indicators, including strong job gains, points to additional strengthening of the labor market, unquote. So the market consensus is indeed that there was additional strengthening in March. If so, it could boost expectations of a Fed move as early as April and thereby boost the dollar. The U.S. Institute of Supply Managers, the ISM Manufacturing PMI, also comes out Friday, along with the final U.S. Market Manufacturing PMI. Now, the preliminary Market Manufacturing PMI was little changed, in contrast to the sharp rises in several of the regional Fed indices. That's raised some questions about exactly what's going on with U.S. manufacturing. The more closely watched ISM index should settle the argument. And that's just the U.S. The action Friday actually starts in Asia with Japan's Tankan, the Bank of Japan's short-term survey of economic conditions. This is the most influential Japanese economic indicator. But the impact on the yen is often counterintuitive. A weak figure can depress the stock market, which pushes down dollar-yen. In other words, causes the yen to strengthen. Shortly after the Tankan, the China manufacturing PMIs come out, both the official one and the market one. These are sure to have an impact on commodity prices and therefore the commodity currencies. We'll also get the market manufacturing PMIs for other countries around the world that day, including the UK and the final EU numbers. Now, the week starts off today with only U.S. data. Today we get U.S. personal income and expenditure, which also includes the personal consumption expenditure deflator. Personally, I think this is more important than the NFP number. The U.S. is already near what the FOMC considers to be full employment, but the inflation rate's still running below target. A further acceleration in core PCE inflation, the inflation measure that they target, should make them more confident that inflation is getting back on track and therefore they can hike rates again. The other key U.S. indicators this week include consumer confidence on Tuesday and, of course, the closely watched ADP report on Wednesday. From the EU, this week we get money supply figures on Tuesday, final consumer confidence and German CPI on Wednesday, and EU-wide CPI on Thursday. The money supply data for February may show how the ECB's quantitative easing program has boosted lending in the Eurozone, but that will be overshadowed in coming months as the new round of targeted long-term refinancing operations that the ECB instituted in March start to take effect. The CPI numbers are, as usual, the key data point for the ECB. The last week of the month brings a number of important Japanese indicators, including employment data and retail sales on Tuesday and industrial production on Wednesday. The data are expected to be mixed. Employment is holding up well, even though output is flagging. The likely impact of that combination on stocks in the yen is ambiguous. For the major central banks, only Fed representatives are scheduled to speak this week. The main person to watch out for is New York Fed President Dudley on Thursday. He's one of the most influential and representative members of the Federal Open Market Committee. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.